I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.
Hello and welcome to another edition of Liberty Nation's Swamponomics videocast. I'm Andrew Moran, Liberty Nation's economics editor. This week, the central bank black hole. How incompetent are the central banks when they own the world's most powerful device, the printing press, and are still deep in the red? Well, this is the reality of the Federal Reserve, the Bundesbank, the Bank of Japan, and the list goes on. Let's kick off with the Fed. A recent study by the St. Louis Fed Bank warned that it could take several years for the Eccles building to recoup income losses. How is the Federal Reserve losing money? Since the summer of 2022, the Fed has hemorrhaged more than $151 billion according to the H41 data. This comes after the Fed recorded its largest ever annual operating loss of $114.3 billion in 2023 after years of generating profits from its balance sheet. Typically, the Fed generates more income than it needs and transfers the additional earnings to the Treasury Department. However, with the Fed holding trillions of dollars in Treasury and mortgage-backed securities, most in the form of long-term assets from the pandemic-era quantitative easing initiative, rising interest rates have eroded its net income. As a result, the Fed is bleeding red ink by the week. So far, the financial markets are indifferent, but experts warn that it could exacerbate Washington's budget deficits because it means less money for the Treasury and forces officials to borrow more. Other experts warn that it could threaten the Federal Reserve's independence. The Congressional Research Service, or CRS, speculated last year that Congress could reverse the institution's statutory reductions in the Fed's surplus, or Congress could eliminate its surplus altogether. In the end, nothing will happen, of course, unless there is a Fed-induced crisis. Peter St. Onge, a Heritage Foundation economist and Mises Institute fellow, recently said that the Fed would not have to do the walk of shame because of a cute accounting gimmick. Here he is talking about the situation.
At the moment, the Fed is in fact bankrupt by a full $1 trillion and rising every month. Interestingly, the Fed will not have to do the walk of shame because of a very cute accounting gimmick where the Fed gets to redefine losses as, wait for it, deferred assets. They can do this because they make up their own accounting rules. And if you're curious what logic lies beneath, normally the Fed pays most of its profits to Congress, effectively commissions paid to Congress for the right to print money. So think of them as licensing fees for a licensed counterfeiter over at the Fed. Pre-COVID, those remittances were about $80 billion a year paid to the Treasury, meaning the real budget deficit was actually bigger. It was being offset by the counterfeiting fees. So now that the Fed has gone and lost a ton of money, it simply books the loss as $1 trillion. It doesn't have to pay Congress.
Now, looking overseas, scores of central banks are seeing red ink too. The Bundesbank, Germany's central bank, reported an annual distributable profit of zero after releasing approximately $25 billion from its reserves. It now has less than $1 billion in reserves. Moving forward, the Bundesbank will report a loss carry forward that will offset future profits. It said, quote, "We expect the burdens to be considerable again for the current year. They are likely to exceed the remaining reserves." Bundesbank President Joachim Nagel said at a news conference that its balance sheet is sound and the central bank can bear financial burdens. This comes after the central bank announced a roughly $4 billion loss due to the European Central Bank's rate hikes to combat inflation. Dutch monetary authorities anticipate that they will suffer additional losses until 2029. The ECB also announced its first annual loss for the first time in 20 years, enduring a loss of nearly $2 billion. It also expects more losses in the coming years, though the ECB does not think it will impact, quote, its ability to conduct effective monetary policy. The central bank said in the statement, quote, "The financial strength of this ECB is further underlined by its capital and its substantial revaluation accounts, which together amounted to 46 billion euros at the end of 2023. Over in Asia, the Bank of Japan posted the largest unrealized losses on its bond holdings on record. The paper losses amount to close to $71 billion at the end of September 2023. Despite the losses, Central Bank Governor Kazuo Ueda is still likely to push ahead with more stimulus to achieve the institution's inflation objectives. Like his counterparts, Ueda does not believe the losses will harm monetary policymakers. At the same time, he conceded that this does not mean the BOJ can record unlimited losses and negative equity. And this is exactly what Judy Shelton, former President Donald Trump's economic advisor and Fed nominee, had recently discussed on a podcast with commentator David Lin. Here's a clip from a recent interview she did on the subject.
They can have heavier and heavier losses. I mean, if they ended up selling off their portfolio like they were originally going to do, pare down the portfolio, and then raised interest rates, then the loss, that's pure operating loss. Would they go bankrupt? No, because the Fed has special rules. They already have $1 trillion in losses on the value of those capital holdings, on the value of their portfolio holdings. So if the Fed had to follow GAAP rules, generally accepted accounting principles, they would be in big trouble financially. But they exempt themselves from following those rules.
The longer the Fed and other central banks keep interest rates higher, the more challenging it will be for these institutions to balance the books again. What a difference a couple of years can make. Keynesians have proclaimed for decades that these entities contain the smartest men and women in the world. And yet, despite possessing the printing press, central banks are losing money. This is stuff nightmares are dreamed of. That's it from this week. Please read my full Swamponomics column on the pages of LibertyNation.com, and be sure to check out my previous Swamponomics videos and interviews. Thank you. I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.